All right, so guys, I think we can start now. Okay, so welcome again. This is the morning market review, where we normally analyze the markets, give you tips and tricks on how to come out profitable on the market. This is Emmanuel Odogu. Thank you for joining us again on this exciting morning market review again. Please, this session takes place every day, 8 a.m. to 9 a.m. every morning, please. Okay, so you can tell your friends and family about it, those that are interested in trading. Okay, so let's get started. Now, just like we always do, we normally like to look at fundamental events, right? Because fundamental events are so powerful that they can disrupt our analysis, they can disrupt our trade. So you want to always be in the know, right? So that you don't be on the trade and then suddenly there is a fundamental and then it gets to scatter your profit or scatter your setup. Okay, so let's head straight towards the fundamental website. So the website we normally use is forexfactory.com. So you can also use the investing.com, right? Investing.com, but for now we're using forexfactory.com. So for all of us joining us for the first time, I'm going to forexfactory.com. You just www.forexfactory.com. So let me go there quickly. Okay, I'm already there. So let me also share my screen so that you can see me. So I am now on forexfactory.com. Please indicate if you can see my screen. Just type screen, just 1 or 2 persons, please. Just type screen, 1 or 2 persons. Okay. Okay, Jacob, I can see you there. Thank you very much. All right. I can see you. I can see you. Thank you very much. So this is forexfactory.com. It shows us the news events, right, for the day. But I normally like to look at the news events for the week, right, so that we can prepare ourselves for the week. Okay. All right. So this is Sunday, this is Monday, and of course, we are in Tuesday. So let's jump to Tuesday. So for those of us joining us for the first time, please, we like to concentrate on this area. This area is the impact of the news, right? So this area is simply the volatility of the news, right? Now, it is actually volatility expected, right? It's not guaranteed, but expected. So that's what it is. So the one with yellow is low volatility news, right? That means we don't really pay attention to it because the volume traded at that period is always very low. And guess what? We always want to trade when the volume is high, right? So we ignore these ones. Now, the one with a brown is medium volatility. And of course, we like to concentrate more on the ones on red, which is high volatility, right? Like for today, 7 a.m. on the dot, we saw a high volatility news on GBP, and that's the claimant count charge, claimant count change rather. And this at the extreme, the right hand side of the website, you get to see the result of the news, right? And these results, they are in 3 forms. We have the previous result, the forecast, and of course the actual, right? Now this claimant count chart, right, is simply a jobless claim, right? So it measures the number of persons claiming unemployment benefits during the previous month. So it is simply those claiming unemployment benefit that we are trying to track here in the UK. So it means we are just looking at unemployment in the UK. That's what it means. So if people are claiming unemployment benefits, it means they are not employed, right? Right? It means they're not employed. So this is the actual. So over here, if the actual is in red color, it means it is a bad news, right? So you can see that the actual came out red, right? Okay. Now that's for 7 7 a.m. And of course, that news has passed. Now, the one we are looking at for today is the 1:30 news, right? 1:30 p.m. Nigeria time. And of course, that news will be on Canadian dollar, right? So you want to keep your eyes open, peeled on Canadian dollar, right? So if you have a trade already running on Canadian dollar, why not? You can still leave the trade open, right? Having your stop loss and your take profit, your risk mitigate and your take profits in place, right? Can leave it open till that time, because if you have set a stop loss, it means that is the risk tolerance you can take, right? So you can leave it open till that time. Now, possibly the news, right, the volatility expected during this time can push the market towards your take profit, right? But if you don't have trade running, they want to take advantage. They want to take advantage of this news. This news is by 1:30 p.m., right? 1:30 p.m. So CPI is simply consumer price index for our newbies here. So it tries to measure the changes in the price of goods and services purchased by the consumer, right? So it is one of the indicators we use to detect the early sign of inflation, right? Okay. So this is the actual space for the actual, right? Now the result is not out yet until the time of the news. Okay, so 1:30 p.m. we're going to see the actual. Generally speaking, is greater than the forecast. Then it's a good news. Good news means you want to buy the Canadian dollar, right? So you just open your chart and straight away you're buying the card, right? Now, for example, how do you buy card? You know, it's only card to trade. You will see card with another currency, right? And that's called currency pair. For example, you will see card JPY, right? So in card JPY, if you want to buy card, it means card is the base currency. So just do a straight buy 1:30 p.m. So you want to do it very fast. You want to do it very fast, right? By 1:30 p.m., you just go with the straight buy. If the value here comes out green, please, right? Now, if the value here comes out green again, and the currency pair like USD card, that means now card is no longer the base currency. Card is now the quoting currency. So if the value here comes out green, that means good for card. So in that case, you're going to sell USD card, right? You're going to sell USD card. In selling USD card, since USD is the base currency, it means you're selling the base currency USD, and then you're buying the quoting currency card. So you're still buying it, right? But guess what? If the value here comes out to be red, that means you're going to be selling card. Please take note, right? Then also still that 1:30. We have news on USD, right? So your best bet would be not to trade USD card as at that time, right? Because there's news on the two. So you want to trade NZD card, right? Card JPY, right? So you want to trade card with any other currency. Also, you want to trade USD with any other currency like Euro USD, right? And of course, GBP USD. I hope we are following up all of this explanation. I hope I'm not also too fast, right? We are going to jump straight into the technical aspect of things, but just let me know if you're understanding what I've been saying, okay? Just type understanding. Please, somebody should type understanding. But if you're not understanding, just type not understanding, or I'm not understanding. Lume, you're telling me to explain one more time. Yeah? I say you should type not understanding, and you're typing not understanding. Just pretend that you're understanding. All right, let me go through it one more time. Okay, thank you for those saying they are understanding. We are saying this is forexfactor.com, right? So and this is where we have our fundamentals, right? So we just focus more on this area. This area is the volatility we're expecting, right? The volatility expected. So the red ones are the high volatility we're expecting, right? So we focus on the red one. So we are saying by 1:30 p.m. today, card will move dangerously. That's what we're saying. We are saying by 1:30 p.m. today, USD will move dangerous because we're expecting high volume due to the high impact news, right? So how do you know the direction? The direction, knowing the direction it will move. Now from here, you just know that it will move, right? From this impact, you just know that it will move. Then this other area is the actual. So from the actual, you want to know the direction. If the actual comes out green, generally speaking, it is good, right? If the actual comes out red, generally speaking, it is bad. So that is it, okay? So let's jump into technical analysis. We have a lot to do in technical analysis, right? So, you know, for you to to emerge profitable and trading very well on this market, you need to understand technical analysis, right? So let's jump into the chart and see how we can analyze the market, and of course see how we can take live trade. Okay. All right, for those of us just joining us, this is the morning market review, and of course this is from 8 a.m. to 9 a.m. every morning. Okay, now this is Emmanuel Odogo. So let's jump straight to our charts. Okay, so let me change to my charts.
They come with it. In don't say in the align with it. Okay, faith I said she even aware that you now want to introduction anything of this one. You know. Okay, you see. How good is that? That kind of thing, you know, supposed to go faith house, go take faith, say,
I think we have somebody that is entertaining us at the background. Please indicate if you can see my chat right now.
No matter how the same be, faith na a senior sister.
Please indicate if you can see my chat. Just type chat, please, if you can see my chat. Someone should just type chat. Okay, you can see my chat. I can see there, Godwin. Okay, so this is the chart right now. So let's look at the technical analysis side of things. Okay, so this is the chart, and of course this is where we try to analyze the market technically. Okay, so like I normally do, I like to start from the USD index. Okay, let's look at what the dollar is doing, because most often than not, our trade revolves around the US dollar. Okay, so for some time now on the H4 time frame, the dollar has been heading downward, right? It has been breaking structure to the downside. Okay, now looking at this technical analysis, we want to look at it in terms of the market structure. Very important, please. In terms of market structure, remember, market structure, I normally say, is the language of the financial market. So you want to understand the language the market is speaking. Okay, so the market has been breaking low, breaking the lows, going to the low side, and quite recently we saw the market having a shift, right? So this is the recent, or this is the high, or this is the last high. You can see that actually broke this low. We call it break of structure, right? So right now you can see that the market has successfully, let me remove this line. You can see that the market have successfully taken out that high. See how much it has moved up. It has taken out that high. So we call that a shift, right? So USD index has been going down. That means traders around the world, right? Especially long-term traders, we have been selling the dollar, right? We have been selling the dollar. But right now that we have seen a shift, right? It means the sentiment around the dollar have shifted. That's what it means, right? So it means the directional bias, right, around the dollar have shifted, right? So we have seen a shift. Now, since I'm talking about shift in the market's direction, let me just quickly show you this so that we get to understand how the market normally shifts. Okay, so quickly, let me show you this. Okay, so please, can you see my screen? Can you see my screen? If you can see my screen, I have a diagram on this screen. Just type market structure. If you can see my screen, it means you're seeing what I'm saying, market structure, right? Okay, yes. You can see my screen. Very fine. So this is what we normally look at for, right? Anytime we are trading, and this is the easiest way to trade quickly. You want to just use your phone. If you're joining us with your phone, just use your phone and just screenshot this, okay? So that you look at this every time you want to take a trade on the market, right? So if you're using a system, if you're using a laptop, I think on the laptop, there is a print screen on the laptop at the top right area of your keyboard. You see print screen. So you just grab it. Okay. So this is what happens when the market is heading upward, right? This is what happens when the market is heading down. So we call this the bullish market structure, and we call this the bearish market structure. Okay. So we have keys here so that you can use this key to understand all of this, right? So the best place to place your buy is when the market has just broken structure and is retracing downward. So this is a structural low. So this is the place where you buy when the market has broken structure and then we are having a change of character. So if you buy here, you're buying at a low risk, right? So when the market is going up, right, of course, you want to look for buying opportunities, right? Okay, so when the market is going down, you want to look for selling opportunities. So quickly, before we place a trade, these are the things we consider. We want to look at our setups, right? Setup. Okay, most persons don't have setup, so they just enter the market anytime they feel like. No, the market must present to you your setup. That means you're not to rush in, right? If you rush in, you rush out. Don't rush in. So the market must present to you a valid setup before you jump in, right? So this is the bullish setup, and of course this is the bearish setup, right? So the first thing you have to identify the market structure. That's the first thing. Know where we are, know the direction the market is heading to. That's identifying the market structure. And you do this on a higher time frame, right? And it can be H1 time frame or it can be H4 time frame. Now make sure the last impulse broke structure, right? So impulse is the movement of the price in direction of the trend. Make sure it actually broke structure. That indicates that there is momentum on the move, right? Now wait for retracement for low prices. That means don't just enter after it's a broken structure. If not, it will be overbought area. So wait for retracement. Retracement gives you a lower price, right? So because you want to buy at a low price. Then of course, points of interest, right? The point that you want to now enter, wait for visible local support. Remember, you want to buy on a support on now a lower time frame. Now wait for signs of bullish movement. So signs of bullish movement or signs of change that the market have changed to now bullish movement is what we call change of character, right? On the lower time frame, then place your trade. So please, we are going to be following these templates, right, as we analyze. I hope you have screenshotted it. Okay, so we are going to be following these templates while we analyze the market. Okay, let me change back to my chart. So back to the chart right now. Okay. So from what I've showed you, you can see that we have seen a change of a shift in the market structure on the USD index, right? So seeing that simply means that the dollar is now gaining strength. That's what it means. No too much big grammar. The dollar is now gaining strength. So let's not jump straight to our first instrument, and that would be the euro. The European euro versus the United States dollars. Okay. Now, just like we always do, we normally look at the H4 time frame, right? So we have seen a shift, right? We have seen a shift. Even on this USD, Euro USD, we have equally seen a shift because this is the last low. This is the last low here, right? So that last low have been taken out. So the market have shifted downward. So since the market have shifted downward, usually we normally look at for retracement, right? To give us a high price. So that means the market will give us a retracement. That's what it means. So let me do this. This is where we got the shift. So it has shifted downward, something like this. So we are going to be needing a retracement for a higher price. So the market will retrace into this area before we now start selling again to the downside. So we're expecting some small movement to the upside, right? So, but you notice the way it was retracing all along. It was giving us very tiny retracements, right? So this tiny retracement indicates high momentum going down. So for example, see what I mean? It pushed down this much, right? And it gave us a very small leg to the upside. Then of course it pushed down again this much. That's the impulse, right? So it traded this much to the downside and break of structure to the downside. So it retraced again to the upside, right? And of course it moved again to the downside. I hope you can see what I'm drawing. So this structure is the bearish structure, right? Like I showed you just now. So this is a retracement, right? So from what we are seeing, the retracement is just so small. So that means there is high momentum, right? Going down. So that's what we can see on the H4 time frame. They will now move over to the lower time frame, just like I showed you, to look at for our point of interest and our local support, local resistance, so that we can take our trade. Okay, so I will now switch over to 15 minutes time frame. So in this section, money market review, we don't just show you, point you to areas where you can buy or sell. We also try to show you how you can be able to achieve this thing by yourself, okay? Right? How you can be able to achieve this thing by yourself, so that on your own too, you can equally know how to analyze the market and come out profitably. So from what we are looking at on that H4 time frame, we saw that we are expecting we saw a retracement to the upside, and that's what just happened here. Then the retracement to the upside, then the next thing would be to start taking the trade to the downside again, okay? So we are seeing this local resistance here, right? See, the market has gotten here the first time, it moved down, and this is the second time the market is getting to this point, right? So we can say if the market breaks this level, so if we see some momentum that push the market go below this level, we can look at for a sell, right? So below this level. So around this area, we can look at for a sell. So around this area, we can look at for a sell, right? So that will be around this area, please, right? So you can see my mouse pointer. I am pointing to the place. So if the price breaks below this area, we can look at for a sell, right? Now, for the aggressive ones, you can still enter a sell right now, right? For the aggressive ones, you can still enter a sell. So let me do a sell there. That's 0.02 there. So we can see do a sell, right? For the aggressive ones. No, but however, for the conservative traders, you can wait for it to break this level. Okay, so we just don't want right now. And of course, okay, so that's for Euro USD, right? That's for Euro USD. Now, however, if we have a push to the upside, that means if Euro USD should move further to the upside, it means this retracement. Remember, we drew this line on H4 time frame. So if we have any more push to the upside, it means the Euro USD, the H4 time frame is still retracing to the upside. That's what it means. So the question will not be how much retracement would be a good retracement. Okay, please just allow me. Let me spend enough time on this Euro USD so that once you understand the concept of which I'm using to analyze the market, then the rest of the instrument we can rush into them. Okay, can rush them, since you now understand the concept. Okay, so back to this H4 time frame. Back to this H4 time frame, right? So let me zoom into the area. We don't really have time, so I'm trying to do it very fast. Okay, now you notice this is the impulse leg, right? This is the impulse leg. How much retracement would be a good retracement, just in case Euro USD is still pumping to the upside, right? Like for its retracing. Now you notice if this market is moving up more, it means it's retracing, right, on the H4 time frame. Okay, so how much retracement would be a good retracement? Of course, now that will give rise to our Fibonacci tool. Okay, you can see my mouse pointer at the top of the screen. I'm just clicking the tool right now. So I will drag from the high, right? So this is the high. I'll drag from the high to the low. So it means even if it pumps further to this level, my sell trade is still valid. That's what it means. So even if it pumps further to this level, please take note of this level, right? So that is above 50%, right? So an above 50% is considered a premium price, right? And that's 50 to 61.8. So even if it pumps further to this level, my sell trade is still valid, right? At that point, I will even enter more sell, right? Remember, you don't use your last bullets at the beginning of the war. In trading, our bullet is like our lot sizes, right? So it means if you want to enter a trade, right, you may want to go with a little bit lower lot size, lower than your normal lot size. For example, if your normal lot size is 0.05, right? So if you want to enter a trade, you might enter with 0.03 or 0.04 or 0.03. Yeah. So if the market gives you more retracement, right, to your choice area, or gives you a lower price for a buy, or gives you a higher price higher than where you entered before, then you can shoot more, right? You can shoot more. You cannot complete it with this other 0.02. I hope I am making sense and you guys are following. Please just type if you're understanding what I'm saying. Just type yes if you're understanding it. Say yes. Okay, Ruth, I can see you there. You're understanding it, right? All right. So now that's for Euro USD, and we've been able to take an instant trade on Euro USD. So let's jump to GP USD. Remember, we have just analyzed the USD index, right? And we have seen that that there is some strength, right, into that is being pumped into the US dollar, right? So US dollar is rallying to the upside. That's what it means, right? So if US dollar is pumping to the upside, it means all of this USD denominated currency pair, right? I mean, all of the currency pair that has USD as the quoting currency, something like Euro USD, something like GBP USD, something like AUD USD, something like NZD USD, all this currency pair that has USD as a denominated currency pair, it means they will start finding their way to the downside as the dollar start gaining strength, okay? So also on this GBP USD, I hope I'm not too fast. Time is not on our side, so I have to talk this fast so that I can cover enough instruments. Okay, before 9. Okay, so you can see that this currency pair is already finding its way to the downside, right? So with my moving averages, right, even on the H4 time frame, they are very equally crossed, right? So this is what we call the cross, the moving average cross, right? So this cross is a sign that the price that was pumping to the upside or that was rallying upward is now set to start going downward. Okay, you know, just looking at this cross, it can also be a strategy for you, right? So we are seeing that the prices now, this is a low, this is a low, this is the last low, this is the last low. As you can see, it's called verified support, right? So this is the last low, right, that broke structure to the upside, right? This is the last low that broke this structure to the upside, right? Now after that, but you can see that all of this movement downward did not really take out this low, right? Not really take out this low. Not really take out this low. Now for Euro USD, it has already shifted. For this GP USD, is yet to shift. But guess what? We are already seeing volume being pumped to the downside, right? So let's now move to the lower time frame, and that will be 15 minutes time frame, so that we can look at our point of interest and where we can pick our trade. All right. Let me look at 30 minutes time frame first. So from what we can see here, this price pumped down, moved down from this level, right? So this point before it's trying to retrace again, right? So this place where it moved down from, it means that point is our supply zone. So this area can be called a supply zone, right? So where the price move drastically from is what we call supply zone. Okay, right? So if this price should retrace again into this area, it means we can do another sell, right? It means we can still sell it. So I would like to sell GP USD again around this area, right? So if the price retraces upward to this area, right, and that will be around 1.25250, so around this area to 1.25415. So around this area, I would still like to sell, right? So please sell around this zone, okay? So that means wait for a higher price, right? Wait for a higher price before you sell. However, if the price should move down further before going to that high price, if it should go trade below this local support here, I would still want to do a sell, right? So if the price trade below this level, I would still like to sell. But right now, it's somewhere at the middle. I don't like to trade when the price is at the middle, right? So this is like a range, right? So I would like to sell if it hits this level or if it breaks below this level. Now that's for GP USD. Now let's look at another instrument here. Let's look at AUD USD. Now this is what I drew on AUD USD, right? So if you understand this market structure very well, it means on your own, you can be able to draw all of this diagram on your charts and follow it. Now, the advantage of understanding the market structure is that you will start following it as it moves, and that it enables you to be on one trade or on one direction for a long time. Now, Now, this is where we got the shift in the market structure. So we saw this movement to the downside, then we saw this retracement to the upside, right? We saw this movement again to the downside. So this means that the instrument is trading downward, right? Now we saw this retracement again to the upside. So it means all along it's giving us lower lows, right? Or the market or the highs is breaking the structural low. And that's the definition of a downward structure, right? Until the first sign of shift is this sign. This is the sign where the market move higher, right? Or give us a high that is higher than the previous high. Remember, all along it was protecting the highs, but right now it took out this high. That's a shift. So we'll call this in a shift. So that means it has shifted from a downward trend to the upward trend. So around this area is when you now start thinking about taking a long trade. Just imagine taking a long trade from here up until here. Right, that's the joy of understanding the language of the financial markets. So after that shift, we expected a retracement. This is a retracement. So this is where the buying is supposed to start take place from. Now, after this, we saw a break of structure, a retrace again. So a break of structure. So that means it was going up until right now. You can see that it have shifted to the downside, right? So if somebody asks you, where is AUD/USD heading towards now? You can say AUD/USD on the H4 time frame is trending downward. Now you can say that categorically. I can tell you that. Now you can see that categorically that AUD/USD is now heading towards the downside because it have shifted. So if it have shifted, it means we saw this impulse to the downside, right? Then now we saw this retracement to the upside. So if it was this retracement went straight into this void area, right? And that's what we call fair value gap. So we can see a value reserve here that AUD/USD pump into, right? So now my forecast and prediction here, you can see this area. So this area is what we call a void from this lower wick to this upper wick, right? Something like this. So let me extend it. So this area is where the market will most likely pump into before going downward. But for what we can see, the market has already tapped that area, right? That's tapped into that area, right? So tapping into that area, we can see that it can now move downward or it can tap further. So AUD/USD have two directions that we can look at for, right? So it can pump further into this area, right? Inside this area before going downward, right? Before going down and breaking this structure to the downside, right? To continue the downward trend. Or it can just start going down since it has already tapped into that area. So understanding this, let's jump into the 15 minutes time frame. Then let's look at the possible trade that we can take. Please, you have question, drop it at the chat box, at the chat room. Okay, so somebody's asking, Isuchuku, so what is the period of my two moving average? Please, I'm using 50 and 21, okay? 50 and 21. Okay, you need a recorded version. Please, we are already recording. It's been live stream, so you can check our YouTube page for it. Okay, you're talking about D30 oil. Okay, we are going to look at all of that. Okay, maybe this AUD/USD will be the last currency pair we are going to look at. Okay, now after AUD/USD, then we can now jump into commodities and of course indices. Okay, so for the 15 minutes time frame, let me go to full screen. Control M. Okay, why is it not going out? So let's do full screen. I'll remove my market watch. I'll remove my terminal. I want to see my chart very well. Okay, so let me understand what is really happening on this 15 minutes time frame. Okay. All right. So once this AUD/USD rally up to this area, I would like to sell, please. I would like to sell if it rally up to this area. So you can see this area on your charts, right? So it's around this price. This price I'm pointing at from here to here, I would like to sell. So you can just take note of this price, or you can even write it down around this area. From this price I am pointing at, look at my right-hand side, right? To this price I would like to sell, right? And doing that, remember, these are the lines we do on the H4 time frame, right? So the reason why we like considering H4 time frame before we come down to the lower time frame is called top-down analysis. So that means you want to look at what the top guys are doing, right? Or if like the big money is doing, right? So that you don't trade against the direction of the market. Most people trade against the direction. That's why they place a trade and they set stop loss. They saw that the market is going up. They now place a buy and place a stop loss below the buy. Now, before they know it, the market has turned and start going down, heading towards the stop loss. And that's what we call stop hunt. So why does that always happen? It means you do not consider the higher time frame, right? You do not consider the higher time frame. So it's always very good to consider the higher time frame so that you can reduce the amount of time the price will head towards your stop loss. So please, if this price head towards this area, I would like to sell, right? However, if we see momentum being moving to the downside, I mean, if the price turn and start moving to the downside, please, I would like to sell around this area, my stop loss around this local support here. But if the price turn and now start going down, so if it trades below this region again, you can see another region I've mapped out for you, right? So I would still like to sell. Remember, the USD index has broken structure to the upside, right? So it's is rallying upward. So that's the strength for the dollar, okay? And we are trying to take advantage of that strength for the dollar, okay? So if it trades below this area, I would still like to do a sell, right? So that means anywhere below around the 0.661515, okay? I would still like to do a sell, right? If you pump into this area, I would still like to do a sell. Okay, now let's consider this the last currency pair we are going to analyze, and before we move into gold, right? Let's look at gold. Okay, Kayode, you're saying, how do I set stop time sell? I don't really understand that. Stop time sell. Please try and refine the question again. How do I set stop time sell? All right, so let's look at gold, right? Gold, one of my favorite instruments, right? Wonderful. Look at what gold is doing. Guys, we are going to make hard profit from this gold. I can tell you that. So the first thing you're going to do is to consider where the direction is going and whether the market have shifted. And we normally do that on H4 time frame, right? So on this H4 time frame, you can see that this market has been pumping upward. How do I mean? It keeps making structure to the upside. You can see this gap to the upside, right? Right, and it was able to grab all of this liquidity. So it formed. So this is the low. This is the low that actually took out this high. Hello, this is the low that actually took out this high, so it came down something like this. So we normally do this to understand, right? So start by doing this on your chart so that you can see it clearly. Most of the time, once you just open the chart will look very confusing. But once you start doing out all of these things, it start looking very easy. You start understanding the direction the market is going. That's now the key. The key, right, is understanding the direction. I can tell you that, right? The key is understanding the direction, so that now one of the reasons for understanding the direction is it can put you in profit, right? Then secondly, if you're running on a negative trade, you will know how long to leave that negative, right? Hoping that the price will turn, knowing that the direction have not changed. That's these two things. Once you understand these two things, most persons just jump into closing their negative trade. Why? They don't feel like, or they don't know whether it will turn back, right? But if you understand the direction, as long as the direction is still in your favor, even if you're negative, right, it means you can still leave that trade, and of course it will turn. For example, just imagine around this point you're on negative, right? And you are buying, right? And around this point you're on negative. Understanding that the structure is still up. Can you see that the market still went up, right? So your negative would have reduced. So understanding the direction is key. So we are still up on the H4 time frame, please. How do I mean? This low has not been taken out. This low has not been taken out, right? So you can see that the market came down to give us equal lows. We call it relatively equal lows, right? That this relatively equal lows is where we have a high demand, right? High demand. That means if the price touch this area, I would like to do a buy. I can tell you that. I would like to buy. Now, on the lower time frame, we are seeing that the price is gradually pumping to the downside. I mean, on 15 minutes time frame, on a 30 minutes time frame, right? So that's the reason for doing this line. It's going down, but it's going down on the H4 time frame. It is still bullish. I can tell you it is still bullish. So if we check 15 minutes time frame, you can see that of course we are already on a downward trend, right? If you check 30 minutes time frame, we're already on the downward trend. So let's check, but take note, if the price gets to this level, most person will be selling, forgetting that this level is a support, right? So that means the price will turn from here. So there's a guarantee that the price will turn from here, right? So 15 minutes time frame right now. Let's look at the kind of trade that we can take, right? So look at that level I drew, right, on the H4 time frame. So if gold should pump further to this area, I would like to buy, right? That's before the news. Please take note, fundamental analysis have no respect for technical analysis. That means all of this analysis we are doing, take note, there is a news, right, by 1:30 p.m., right? So that news can disrupt most of this analysis. So you want to do all of this thing this morning, right? And of course, be on your chart by that time. So I would like to do a buy on euro, on gold around this area, right? However, if this price pump further to this local resistance around this area, I would like to do a sell. So please take note of these areas. I can use a pending order, okay? If you don't know how to do pending order, I think we have videos on that. You can check our website. You can check our YouTube channel, right? We have videos on that. So you can do, right, a sell limit here, right? So that if gold retrace to this area, so that it can pump or it can move further to the downside. So you can do a sell limit around this price on gold. Please set it, right? Take note of the price, a sell limit around this area, right? So if gold trade towards this verified support, right, which becomes our demand area, you can do a buy. Okay, so this will be a buy limit, right, around these prices, so around 2000. So if gold trade towards 2000, you can do a buy around that area, and of course you can do a sell limit. So please take note, buy limits here, and of course sell limits here. Okay, that's it for gold. Now let's look at US 30, US 100. Okay, let me take some of the questions. So Ruth is asking, won't the strength of the dollar affect gold? Of course, it will affect gold, right? It will affect gold. Now, what we are trying to do, remember, even if there is strength, right, we normally observe retracements, right? So if this should move towards the downside and gold pumping further to the upside, that will be a retracement for the strength of the dollar. Okay, so if we say a currency pair or a currency is strong, it doesn't mean it doesn't go through retracement. Retracement is like the moment of weakness, right, for accumulation of more trade or more momentum to move to in the desired direction. So in penny orders, Chris, I can see you there. It was up. In penny order, is it permitted to place a buy stop and sell stop at the same time on an instrument? Wonderful question. Now, this is one of the frequently asked questions in this industry. Can I place a buy stop and a sell stop at the same time, or two penny order? Yes, of course. Now you notice most of the time the two of them will not be triggered at once, right? One of them will get triggered. Now, of course, if one of them gets triggered and that is your directional bias, right? So you can quickly close the other one. If one gets triggered, you can close the other one. But if you don't close the other one, it means one can get triggered. Of course, that one should also have stop loss and take profit in place. So if the stop loss and take profit in place is being hit, of course, the market can sit down again and trigger the second one, right? But you don't want to be in a situation where the two of them gets triggered and the two trades, right, both buy and sell, are running at the same time. So you can do a buy stop. You can put the two at the same time. Please, you can do a sell limit here. You can also do a buy limit here at the same time. Two of them will not get triggered at the same time. They will not get triggered at the same time. One of them will get triggered then before you can now close the second one. Okay, is it proper to set take profit without setting stop loss? Wonderful question. So your question is actually, I don't want to set stop loss. That is what your question is. So if you want to set stop loss, it's still fine and good. That means you have to be on the chart to know how much risk you can tolerate, right? So you can take profit with that stop loss. It's also good. But then if the trade is going against you, right? So you want to be on your chart or be checking your trade to know how much risk you can tolerate. So if it has gotten to your risk tolerance, I mean the amount of risk you can tolerate, why not you can intervene by closing the trade by yourself. Now, another thing you can do is if there is no stop loss, that means you're keeping it open, expecting the market to turn later in your direction. That means possibly you did not enter all your volume at the same time. Why not? I like that kind of trading system, right? It's called stacking. That means you place the first trade, maybe 0.03, hoping that if it retraces further, you can enter another one, maybe another 0.02, right? To accumulate it. So you can also do that, okay? So you're asking this question, please. Okay, this will be the last one I will take before I jump into US, the index. What's wrong with setting buy and sell order running at the same time? If you set buy and sell order running at the same time, it means the market heading to a particular direction, let's say upward direction, the buy will be in profit, and of course the sell will be on negative, okay? And that will be of the same amount. So let's do US index. Let's do, okay, I've answered those questions. So after this again, I will go back to answer more questions. Let's look at US 30, right? US 30. So what can we do here? So you can see that on the H4 time frame, we have broken structure to the downside. Clear, right? Very clear, very clear, very clear. For those of us doing long-term trading, right? Like swing trading, we have broken structure to the downside. So this is the last low that was taken out, right? So since you are broken structure to the downside, it means if you have a sell trade, it means if you have a sell trade that is on negative, since the structure have shifted to the downside, you can still leave the trade. That's one advantage of knowing the direction of the market. You can still leave the trade expecting that it will turn, right? So this is where we got the break of structure to the downside, right? So the structure have shifted to the downside. So one of the advantages is that if you have a sell trade that's running on negative, since you know that the structure has moved to the downside, I mean downward trend now, it means you can see leave that trade expecting the market to turn, right? Most persons have negative trade without knowing when to close it. So this is how to know. This is how to know. Very simple. Now you can see that the market is targeting this low, right? For a downward trend, we are always targeting the low, right? That becomes the target or the targeted liquidity, right? So we are targeting this low. So we are targeting this low. But before going that low, the market doesn't just go down low straight. So it has to do all of these internal dribblings, right? On these internal dribblings, we can see a range, right? Let's talk about range for a while. We can see a range. So this is a range. So the market has created for us a range. So I'll go down to a lower time frame, maybe 1 hour, okay, 30 minutes. So it will make that range very clear. Please, everyone, US 30 is on a range for intraday traders, right? And whenever you see range, I can tell you this, right, for free. Whenever you see range, it is time to amass massive profit. I mean, you are not going to be trading at the middle of the range. No, you are only going to be doing your intraday trading and scalping at the high bound or at the high here or at the low, the upper bound or at the lower bound. So that means we are going to be doing a sell if this market can push further to this area to continue our range, right? But remember, keeping in mind that the higher time frame, H4 time frame is going down, right? So if it moves to this area, I would like to do a sell, right? A sell here, expecting the price to go down like this. So I would like to take my profit here. So please sell around this area. I'm trying to hovering my mouse pointer around the price. Please sell around this area. That means from here to here, I can do a sell. Remember, selling on this 15 minutes time frame is healthy. On this 30 minutes time frame is ideal. Why is it ideal? It's ideal because the higher time frame have shifted from upward trend to downward trend, right? So the market or the forces behind the market is in your favor. So, however, I can see another level here that I would still like to sell, right? It's always very important for you to map this area. So all of these areas are discount prices, right? That you can sell from. All of these areas, discount prices. But for this one, it's in a range, right? So we want to take advantage of this range. So if this market trade around this area, please for US 30, I would like to sell around this area and take my profits around this area. Okay. Now that's for US 30. Okay, let's look at US 100. Very volatile. I mean, I like US 100. So let's look at US 100. On US 100, let's understand the direction. So you can see what I do, right? So this is what I always do on my chart, right? It enables me to understand the direction, right? I can understand the direction, right? So from this, we can see that on the H4 time frame, this high has not been taken out. Am I correct? Let's look at it. Okay, it's about to take out this high. So it's giving us, for now, it's giving us relatively equal highs, right? Relatively equal highs. So on the H4 time frame, this is still pumping upward. Please, for those of us trading swing traders, H4 time frame is still pumping upward, right? Still pumping upward. It's still going upward. That means rallying up. So if H4 time frame is rallying up, then let's come down to 30 minutes or 15 minutes time frame for our point of interest, right? Our point of interest. So you can see what I mean. It's pumping upward. Wow. So if it's pumping upward, it's a time to do a buy. You can guess right. It's time to do a buy. It's time to do a buy. So when can you buy? You can buy when there is a discount. You can buy when there is a discount. Show me one person on earth that doesn't like discount. Everybody loves discount. Everybody wants to buy at a low price. Buy at a low price. So for now, it's considered high price because it's rocking this resistance, verified resistance, right? So this level would have been a good place for a buy, but we missed this one. We missed this one. Remember, since the H4 time frame is giving us upward structure, we want to do a buy. We want to do a buy, right? So you can see that the market is giving us this this trend line, as you can see, right? So it means if I extend this trend line, hello traders, if I extend this trend line, it means I should be expecting now if this price break this resistance, right? If it breaks that resistance, right, I should be expecting a retracement around this area to continue my buy. Okay, so if it breaks, please take note, you don't want to jump into a trade on US 100 for now. Please take note, intraday traders. But for long-term traders, if you have a buy, you can leave the buy open, please. Please take note of these things I'm saying, very important. Okay, you're asking of US 100. I'm already on US 100, okay? You're asking of US 100. I'm already on US 100. Thank you. Now, you don't want to jump into a buy for now until this resistance is taken out, right? So if the price today, right, break this resistance, right, for today, or break it to the upside and do a retracement back to it, that is when you can buy, right? So you want to buy, it not breaks out of this range and come back to for a retest. This is when you buy, right? This is when you buy. But remember, from what I shared to you, from this diagram I shared to you, there's something called change of character, right? Let me go back to it. It will benefit you a lot. think I lost you guys. I think we are back now. We are back. We are back. So this change of character is the first sign you see to show that the market is about to change to a new direction. So if the market is moving to the upside, wait until you see this change of character before you do a sell. If the market is moving to the downside, wait until you see this shift, this change of character before you do a buy. So you must wait. Most persons like to just place buy if the price is pumping up, 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 up. They just conclude in their mind that the price has gotten up too much, it must fall. No. Before you do that, wait until you see this sign, right? So let me show you this sign. This sign is simply when the market has violated the lows and violated the highs, depending on the direction. So let me go back and show you this. Now I'm showing you that because of what is happening on US 100, right? So on US 100, remember we said this area is a resistance, right? So if you must sell, you must wait for a change of character, right? So you must wait for a change of character. I mean, the market should give us something like this. Let me do it for you so that you can see. So for this upward trend, we are seeing higher lows and of course higher highs. But the market should give us the first violation of that pattern, right? Something like this. The market should give us the first violation of that higher lows. So if the market does something like this, right, please, patience is needed in this business, right? So you have to be patient enough to see this. So this is a violation, right? This is a violation here. It means it has given us it has violated the low, right? So that means it has given us a low that is lower than the previous low. That's a violation because all along it was giving us higher lows. So this is a violation. So this is the first sign of change of character. So when you see that, then you wait for a retracement to the upside. Then around this area you can sell. So please, this is what you have to see before you sell. I hope I'm communicating here. This is what you have to see before you can sell, right? Otherwise, if it breaks to the upside, then wait for a retracement, right? So that you can do a buy, right? So now that's that for US 100. Then of course, let me go to D30. Okay, you're asking how do we get to the, you're not seeing my chart? No, of course you can see my chart now. You can see my chart. Audio is back, thank you. You can see my chart. Okay, how do you get the recorded version? Please, we are streaming live, okay? So you can just go straight to our YouTube channel, Rally Trade. Just type Rally Trade. Just type Rally Trade on YouTube. You get to see the live recorded version, okay? So you can go to it. It will help. Go to it. Now, we're almost rounding up. This is already 9:09. So let's look at D30. Where is my D30 here? D30. Wow, we can see enough whipsaw on D30, right? So up, down. So those of us scalping must have taken some profit up, down, but we saw a gap here, right? Now this is me analyzing on a 15 minutes time frame. I don't really like to do that. I like to start from a much higher time frame so that I can understand where the direction is heading towards. Okay, so the market gave us a relatively equal highs here, right? Even though this high is higher, right? This high is higher. Oh, is it higher? Are you sure I'm seeing this? Okay, it's not higher. Thank God I've been able to remove that. Okay, so this is we have the week, right? At the upside here, right? Okay. Now, then of course it breaks structure to the downside, right? It breaks structure to the downside. So this is the last low we saw. So it's something like this. What's that? So something like this. This is the last low we saw. So this is the last low we saw, right? This is the last low we saw, right? That I've started pushing to the upside. But you notice it did not break structure to the upside, right? It did not, right? Because this is lower than this. That means we are still, so it pushed down. So this is a higher low, right? Higher low. So, but we have not been able to take out this high. So this high is still the verified resistance, right? Then from here, from this low, we pump to the upside, right? So then we are gradually moving to the downside, right? So we have not been able to take out this high, right? So it is this high that gave us this break of structure to the downside. So that means D30, right, have broken structure to the downside on the H4 time frame. But it's very confusing. If you not look very well, you will not really understand it, right? That is what the market tries to do. The market tries to keep you in a situation where you don't really understand what's happened, right? But don't be in that position. Find a way to understand it, and that's what I'm trying to do for you. Find a way to understand the direction the market is going. So on the lower time frame, so we can see this resistance, right? So I would like to do a sell. Okay, the market has already hit that level, right? So if the market comes again, right, giving us another opportunity, I would like to do a sell here, right? I would like to do a sell here. So if this price gives us another opportunity, trade towards this upside, I would like to do a sell. If this price trade towards this upside, I would like to do a sell here, right? I would like to do a sell here. And of course, my take profit will be on this verified support. So a sell, please, on D30 at this level. So around this price range, from year to year, I would like to do a sell. Please, you want to do a sell limit around this price. So look at this price, please. You can take them down. All right, let me take questions. Then, of course, try to wrap it up, please. And now it's very difficult for us to cover all of the instruments, right? Especially the ones you're calling, but we have been able to cover quite a good number. Now, if you notice, it's not just covering, tell you where to buy or tell you where to sell. You have to also understand how we are getting these things, right? And how we're analyzing the market. So I think we have done analysis on GPUSD. So Lumen, I can see that we've done analysis on GPUSD. Okay, just check the live recorded video on YouTube. Okay. So Taiwo, you need the recorded video. Okay, fine. Just check YouTube, please. Check YouTube. Okay, please. Once again, this is Emmanuel Odogu, and of course, this is my number 09026264507. Right? So Emmanuel. Okay, thank you very much for joining us on this morning market review. So please, we do this every morning, right? So please try and join us again tomorrow. 8 a.m. is the time, right? For another exciting analysis, right? Please, you are guaranteed to make profit. Follow up all of this analysis, and of course, you see that as the time goes by, then you're going to start making good profits. Okay. Thank you very much. Bye for now.
Thanks, Odogu.
Thank you, sir. Really enjoy your class, sir. God bless you.
All right. Thank you very much. You're welcome.
Thank you, sir. We really enjoyed your class. See you next time.
Thank you for the lecture. God bless you.
Thank you, sir. God bless you.
Thank you very much. We enjoy your time.
Daddy.